Hello and welcome. In this lecture video, we will be doing additional practice, covering the financing and investing activities section of the statement of cash flows. So the first problem that I want you to work on, goes back a few pages in your course pack. So this is right after we're talking about the indirect method and we did this problem. And then what I told you in a prior lecture video is I'm going to save this one for a future lecture video. Well, that time has come. So let's go ahead and work on this one together. Okay. So it says right over here, preparing a company's statement of cash flows for the most recent year, the following information is available. And so what we want to compute is net cash flows from investing activities. Now, one of the things right away you can see is, look, one says used, one says provide. It's the exact same dollar amount. One says used, one says provide. Remember, used would mean cash outflows exceed cash inflows. Provided means cash inflows exceed cash outflows. So when we're doing this problem, the first thing we want to do is go through and figure out which ones of these relate to investing. Okay? Which ones of these relate to investing activities? So definitely the purchase of equipment. Okay? Proceeds from the sale. This is saying how much cash did you get? Absolutely that one. And then also the other one is the purchase of land. Now you can see in the loss of the sale of equipment, that would be dealing with our operating, because remember that's a non-operating loss that we would have to want to deal with in our operating activities. Any bonds, that is financing. Purchase of treasury stock affects equity accounts, that's financing. Issuance of common stock affects equity accounts, that's financing. Increase in accounts receivable, decrease in accounts payable. Remember, those are some of those step 1 and step 2 in the operating activities section of the statement of cash flows. And then payment of cash dividends, we know that's financing. So now we can do is we can go through and take a look at only the ones that are labeled I. Now, purchase of equipment for $145,000. Is that an inflow or outflow? That's a cash outflow because I'm buying equipment. And then I say proceeds from the sale, that is an inflow. Purchase of land, that's also an outflow. Okay? So what I can do is I can say I have my 126 from the sale of the land. And then what I have is I'm going to represent my outflows, parentheses, 145, the purchase of equipment, and then my purchase of land. So 126 minus the 145 minus the 115 gives me 134 net cash outflow. And that's why used would imply it's that net cash outflow. So the right answer is A. The reason the right answer is not B is because outflows are more than inflows, and that would mean used. If inflows were more than outflows, we would say provided. Okay? So that covers that. And give me a second, I'm going to locate the next quick check problems that I want you to do. So I'm going to pause the lecture video. Okay, so the next two quick check problems that I want you to do are these two in your course pack. All right, so let's look at the first one. Use the following information to calculate net cash provided or used by investing activities. So we have these different transactions. The first one is equipment with book value of $125, original cost of $220, was sold at a gain of $22,000. Here's the tricky thing about this one, is we're not given how much cash it was sold for. We don't know, but we can figure it out, and I'll talk about that in a second. Paid $49,000 cash. You can see the effect on cash right there. Sold land costing $30,000 for $26,000 cash. You can tell right away that's what we're dealing with, right? Long-term investments in stock are sold for our $41,000 cash right there. So what we want to do is figure out with investing activities. This one's not too bad, right? Because we can just come over here and we can say cash paid for truck. We know it's a cash outflow because we paid cash, so I'm going to show that in parentheses. Sold land for $26,000. Cash from land, $26,000. Long-term investments in stock are sold for $41,000. So cash from stock, $41,000. And so what I need to know is part A, cash from equipment. Now I'm not given that, but I can figure it out. So give me a second, I'm going to turn the page over. Okay, so let's take a look at how to solve this problem. So it says right there, equipment with the book value of $125 and an original cost of $220 was sold at a gain of $22,000. So what we can do to solve this problem is we know how to calculate book value. We know what book value is. And book value is equal to the asset cost minus the accumulated depreciation. So I have my book value equals 125 minus 220 equals 220 minus my accumulated depreciation, which is 95,000. Now, the reason I did that is because we know the journal entry to dispose or for the sale of equipment. We're going to debit cash. We will debit accumulated depreciation. We are told that there is a gain, and then we know we will credit equipment for the original asset cost. So we are given this number, 220. So we credit to equipment for 220 because we don't have the equipment anymore. We credit the gain for $22,000 because gain is considered additional revenue. $22,000 credit. Then we backed in to figure out what accumulated depreciation was by taking our book value, which we know is equal to 125, and then we know our asset cost is 220. So then we just take our 220 minus the 125, which gives us the 95,000. And we know that we will debit accumulated depreciation for $95,000 right here. So then what we can do is we know our debits have to equal our credits. We have a debit of 95 and we have a credit right over here of the 22,000 plus the 220. So the way to solve for the missing debit cash, because we know we are going to debit cash, is by taking the 220 plus the 22 minus the 95 must give you the missing debit to 147, and then that's how much cash you sold it for. This is kind of a long way, but it really shows you exactly what's going on. Okay, and make sure that you understand the concept of book value as well, and how to do the full journal entry. Right over here, the quick way to figure out how much you sold it for is it told you the book value, and then it gave you the gain. It said you sold it for $22,000 above the book value. That gain, what does that mean? Gain means how much above the book value. You know the book value, you know the gain, you sold it for 147. That's the debit to cash. Okay? So when we continue on, we have our 147 right there. So now what we can do is take our 147 plus the 41 plus the 26 minus the 149, and we get 165 net cash used by investing activities. Okay? Let's look at this one right over here. I want you to pause the lecture video and solve this problem and see if you can't do it. Okay? Pause it, solve the problem, come back. Okay, welcome back. So let's see how you did. You should have got net cash used by financing activities of $7,000. How do we get that? Well, the first thing to do is you go through and you label these as whether they relate to financing, investing, or operating. Net income is not a transaction, but if we were to put it into one of those buckets, we would say it deals with the indirect method for the operating activities section of the statement of cash flows. So I put an O there. Sold common stock, that is financing because it deals with equity. Paid cash dividend, that's also financing, deals with equity. Paid a bond, that's a long-term liability, that is also financing. Purchase equipment, That deals with long-term assets, that's investing. So I can take my 4,000, this is a cash inflow, this is a cash outflow, So 4,000 minus the 3, minus the 8, negative 7. This is my net cash used because my cash outflows exceed my cash inflow. So I say net cash used by financing activities, okay? So now what we can do is we can summarize for our Genesis company, which is this example that we've been dealing with over here with our Genesis company, okay? So recall from prior lecture videos that we had net cash provided by operating activities equal to 20,000, okay? And then we had net cash provided by investing activities equal to 2,000, and then net cash used by financing equal to 17,000. That gives us a net increase in cash equal to $5,000. And how did I get that? The 20 here plus the 2 minus the 17 gives me 5,000. Now if I look back over here at my Genesis company, I have beginning cash of 12,000. And I know that's kind of hard to read, but you can pull it up on your course back. Beginning cash of 12,000, ending cash of 17. So then what I do to do my reconciliation, I say 12,000 beginning, which is last period's ending, plus my net increase in cash should equal my ending balance in cash of $17,000, and it does, and everything works out. Then here would be the full statement of cash flows, and here again is where we got that 20,000, the 2,000, and the 17. The 20 plus the 2 minus the 17 gives us that 5. The 5,000 plus the beginning balance of 12,000 equals 17,000. And then when we do that, we would want to make sure that ending cash is indeed 17,000. And as you saw in the balance sheet, it sure is. Okay. One final topic to talk about in this lecture video is a ratio. It's called cash flow on total assets. And this will be on one of your test questions. So the way we calculate this ratio is by dividing operating cash flows by average total assets. Now, when I say average total assets, what I would mean, if I didn't give you the average, how would you figure out the average? You would say assets at the beginning of the period plus assets at the end of the period divided by 2, and then that gives you the average. So when we come over here and we look at this problem, we're just going to take our cash flows from operating activities, which is given to us at 120, divided by our average total assets, which in this case is given to us. But remember, on the test, I may not give this to you. I may say, here's beginning, here's ending, and then you would have to then calculate the average. And the way you would do that is beginning plus ending divided by 2. In this case, I made it easy for you. And then you get a ratio of 4.8%. Okay? In the next lecture video, I will talk about the direct method for the operating activities statement section of the statement of cash flows. Okay? Thank you so much.